A very good evening to Miss Amira Hazima and everyone. Welcome to our group presentation for BEFB 1013 Principle of Finance. We are Group 6 from MC033 and it's a pleasure to be here. Today we will be discussing on the telecommunication and media sector. We hope you find our insights informative and engaging. Let's get started. Now, before we dive into the details, we would like to introduce the dream behind this presentation. First up, let me introduce myself. I'm Dineshwari Anapurapuran Sugumaran. Next, we have Siti Masliana binti Marus. Following that is Vishalin Anapurapuran Parasuraman. And finally, we have Kuratuhaini binti Muhammad Saban. We will all work collaboratively to bring you this presentation and we are excited to share our findings with you all today.
Good day everyone, my name is Vishalini Parasuraman and today I will be presenting the company background of Astro Malaysia Holding Berhad, one of Malaysia's leading media and broadcasting giants. Astro operates in the media and broadcasting industry. The company has played a key role in shaping Malaysia's media landscape over the years. Its core business revolves around three main areas: satellite television service through Astro TV, digital content distribution via Astro Go and NJOI, radio broadcasting with popular stations like Era FM. Astro owns several well-known brands such as Astro TV, their premium satellite television service. After that, NJOI, a subscription-free TV service, Astro Go, their on-the-go streaming platform, and Era FM, one of the top Malay language radio stations in Malaysia. Some key highlights about Astro include: it is Malaysia to pay TV provider service millions of households. The company is expanding aggressively into digital streaming to stay relevant in today's fast-paced media environment. Astro also continues to innovate by offering multi-platform content delivery, reaching audience across TV, radio, mobile, and online platforms. In summary, Astro Malaysia Holding Berhad is pioneer in Malaysia media industry, consistently evolving to meet the demands of modern viewers. Its strong brand preference and commitment to digital transformation make it a key player to watch.
Next, company background is Star Media Group Berhad. As you can see, Star Media Group operates primarily in the media and publishing industry. Their core business is quite diverse, such as like newspaper and magazine publishing, with their flagship newspaper, The Star, being a prominent example. They also have a strong presence in radio with popular stations like 988 FM, and reflecting the shift in media consumption, they also manage various digital portals. Speaking of their famous brands, beyond the Star newspaper, they are also well known for Star Online, their digital news platform, and the aforementioned 988 FM radio station. These brands have significant reach and recognition in Malaysia. Looking at some of the highlights for Star Media Group, they are an established brand in print media with a long history and strong legacy in newspaper publishing. However, recognizing the evolving media landscape, they are actively diversifying into digital and events. This strategic move is crucial for their future growth. Despite these efforts, they are currently facing revenue drop from print aid decline. This is a common challenge for traditional media companies globally, and advertising revenue shift from print to digital platforms. Understanding these points gives us a good overview of Star Media Group's position and the challenges and opportunities they face in their current market.
Hi, my name is Kuratuhaini. Now, I will present about Green Packet Sendirian Berhad. Green Packet operates in the technology and telecommunications industry. Originally a telecommunications company, it has successfully transitioned into a digital solutions provider with a strong focus on fintech and smart city technologies. Its core business includes offering digital platforms, financial technology solutions, and Internet of Things systems that help enhance urban living and promote cashless ecosystems. Some of its well-known brands include Keeper Pay, which is an e-wallet and cashless payment solution, and Keeper Park, a smart parking system designed for urban environments. The company is now positioning itself as a key player in Malaysia's digital innovation space, providing services that support cashless transactions, e-wallet adoption, and IoT integration, especially for smart city development.
Amtel Holding Berhad operates in the technology and industrial ICT sector and was established in 1996. The company focuses on geospatial solutions, GPS tracking, and system integration. It also provides navigation software and fleet management system, serving both public and private sectors. Amtel's key strength lies in its niche expertise, especially in mapping and tracking technologies. It has maintained consistent profitability and keeps in-debt level low, which reflects strong financial disciplines. However, it does face some challenges. It has a relatively small market capitalization and limited brand visibility, and it relies heavily on project-based contract, which can sometimes affect revenue stability.
Now I will present Sesbadi Holding Berhad, a well-known company in the educational and publishing industry. Sasbari core business revolves around publishing educational books, developing a learning platform, and producing STEM robotic kits aimed at enhancing educational technology. The company is highly recognized for its Sasbari textbooks, which are widely used in Malaysian national school curriculum. In recent years, Sasbari has been diversifying into digital and hybrid learning, showing a strong commitment to innovation. Their move into mobile learning and interactive kits position them well in the modern educational space. In short, Sasbari continued to play a key role in shaping the future of educational in Malaysia by combining traditional publishing with cutting-edge educational technology.
Now let's move on to the core of our financial analysis. This table presents the financial ratios for each of the company we are examining, such as Astro Malaysia Holdings Berhad, Star Media Group Berhad, Green Packet Berhad, MTEL Holdings Berhad, and Sasbari Holdings Berhad. We are included data for both 2023 and 2024 to show trends. We will categorize this into 4 key financial ratios. First one is the liquidity ratios. These ratios, including the current ratio and quick ratio, help us understand each company's ability to meet its short-term financial obligations. A higher ratio generally indicates stronger liquidity. Looking at the numbers, we can see variations across the companies, with some like MTEL Holdings Berhad demonstrating very strong short-term solvency, while others show more moderate positions. Next is asset management. This section covers how efficiently each company is utilizing its asset to generate sales and manage its operation. This includes metrics like inventory turnover, receivable turnover, total assets turnover, and the average collection period. These ratios give us insights into how well a company is converting its assets into revenue and managing its working capital. The data here highlights significant differences in operational efficiency. For instance, some companies show very efficient inventory and receivable management, while others indicate longer collection periods or slower asset utilization, which could be due to their specific business models or operational challenges. Next is debt management ratios. These ratios, including the total debt ratio and times interest earned ratio, provide insight into how each company is managing its financial leverage and its capacity to meet its debt obligations. Looking at the data for 2023 and 2024, we can observe varying degrees of debt releasing and interest coverage across the companies, indicating different risk, appetite, and financial structures within the sector. Last one is profitability ratios. These sections covers key metrics like net profit margin, return on assets, and return on equity. These ratios are crucial for understanding how effectively each company is generating profit from its sales, assets, and shareholder investment. The data for 2023 and 2024 shows a range of profitability performance among these companies, reflecting their individual operational efficiency, market positions, and the challenges or opportunities they faced in the past 2 years in the Malaysian telecommunication and media landscape. By comparing these ratios across the different companies, we can gain valuable insights into their financial health, operational efficiency, and overall performance within the telecommunication and media sector in Malaysia, observing how these companies manage their finances in 2023 and 2024.
Okay, now let's begin our financial ratio analysis by looking at the current ratio, which measures a company's ability to cover short-term liabilities using its current assets. MTEL and Green Packet lead with very strong current ratios of 4.13 and 4.16, showing excellent liquidity. Star Media is also doing well with a ratio of 2.23, which is above the DL benchmark of 2. However, Astro shows a ratio of only 0.70, which raises concerns about its short-term solvency. The conclusion is, overall, MTEL and Green Packet are the most liquid, while Astro appears to be financially strained in the short term. Next, let's look at the quick ratio, which includes inventory to give a more accurate view of a company's immediate liquidity. Once again, Green Packet 4.06 and MTEL 3.86 stand out with excellent quick ratios. Star Media 2.10 and Sasbari 2.05 also show strong positions above the ideal level. But Astro's quick ratio is below 1.0, which reinforces concerns about its ability to meet immediate obligations. So the conclusion is Green Packet and MTEL show strong quick liquidity, while Astro remains in a risky position. Moving on to inventory turnover, this ratio tells us how quickly a company sells its inventory. Astro leads significantly with 86.03 times, reflecting a high turnover typical in fast-paced media operations, Star Media 10.47 and MTEL 9.69 also show efficient inventory management. On the other hand, Green Packet 0.96 and Sasbadi 1.01 show very low turnover, which might suggest overstocking or slow-moving products. So Astro is the most efficient in managing inventory, while Green Packet and Sasbadi may need to improve. Now let's examine the receivable turnover ratio, which measures how quickly a company collects payments from customer. MTEL 10.72 collects receivables the fastest, showing strong credit management. Astro 5.77 performs moderately. Star Media 3.71 and Sasbadi 2.37 are slower in collecting debts. Unfortunately, Green Packet 0.87 has the weakest performance, which may result in cash flow delays. So MTEL leads in receivables collection with Green Packet, while Green Packet is the least efficient. Now let's look at the total assets turnover ratio, which shows how efficiently a company uses its asset to generate revenue. MTEL 0.79 is again the leader, showing effective use of its resources. Astro 0.59, Star Media 0.49, and Sasbadi 0.47 are performing moderately. Green Packet with a ratio of only 0.22 shows poor asset utilization. So MTEL is maximizing its assets, while Green Packet lags far behind. Finally, we review the average collection period, which tells us how long a company takes to collect receivables. MTEL performed best collecting within 34 days, Astro 63 days, and Star Media 98 days are slower but still manageable. Sasbadi 155 days is quite high. Green Packet shows an extremely delayed collection period, which could lead to major cash flow problems. Thank you.
Let's start with the total debt ratio. From the table, Astro Malaysia has the highest debt level at 0.80 in 2024, indicating heavy reliance on borrowings. Meanwhile, MTEL and Green Packet show the lowest debt level at 0.15 and 0.11 respectively, reflecting a strong financial stability. Star Media and Sasbadi remain moderated below 0.40, which is still acceptable. In conclusion, the strongest company in terms of debt control are MTEL and Green Packet, while Astro show the high financial risks. Next, we have the time interest earned ratio, which tells us how well a company can cover its interest expense. MTEL and Star Media have the highest TRE ratio, 14.68 and 14.11, showing they are in very strong position to pay interest. Sasbadi and Green Packet are still safe with value around 7. However, Astro dropped to just 2.01, which is a red flag. This means they may struggle to meet debt obligation. In conclusion, MTEL and Star Media are the strongest, while Astro is the weakest in interest coverage. Looking at net profit margin, Green Packet has the highest margin at 31.50% in 2024, followed by MTEL at 7.46%. Star Media and Sasbadi are stable with 4.36% and 3.31% respectively. Astro again ranks the lowest with just 0.83%. In conclusion, Green Packet and MTEL are the most profitable, with Astro show the weakest performance. For return on asset, which show how effectively a company uses its asset to generate profit, Green Packet leads with 6.97%, followed by MTEL with 5.87%. Star Media and Sasbadi are lower, while Astro is the bottom with just 0.49%. In conclusion, Green Packet and MTEL use their asset effectively. Astro has the weakest performance. Lastly, return on equity show how much return shareholders earn. Green Packet and MTEL again top the list with 7.62% and 6.87% respectively. Star Media and Astro follow, while Sasbadi has the lowest ROE at 1.96%. In conclusion, Green Packet and MTEL are the most rewarding to shareholders, and Sasbadi ranks lowest.
After analysing 5 companies in the same sector, we have chosen MTEL Holdings Berhad as the best investment choice for 2024. There are 2 main reasons for this recommendation. First, MTEL shows excellent liquidity and asset efficiency. It has the highest current ratio of 4.3 and a strong quick ratio of 3.86, meaning it's very good position to pay off its short-term debts. It also leads in receivable turnover with 10.72 times and an average collection period of just 34 days, which show its collect cash quickly from customer. On top of that, it has the highest total asset turnover at 0.79, showing it uses its asset more efficiently than the other companies.
Next is strong debt management control and profitability. MTEL shows the lowest debt ratio at 0.15, indicating minimum realized on borrowed funds. This suggests a conservative and financially stable approach, reducing financial risk. They also have the highest times interest earned at 14.68. This demonstrates a very strong ability to pay their interest obligations from their earnings, a crucial indicator of financial health. Finally, MTEL maintains a healthy profit margin of 7.46%, return on assets of 5.87%, and return of equity of 6.87%. These strong profitability ratios shows that MTEL is effectively converting sales into profit and generating excellent returns for its shareholders and from its assets. In summary, MTEL Holdings Berhad has strong liquidity, efficient asset management, steady debt control, and consistent profitability to make it our top recommendation for investment within this sector. That's all from us. Thank you for listening to our presentation.